Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, for an update on the latest COVID-19 news, the U.S. and global economies reopening, and how investors are modeling all of this out. And Phil, to kick off the week, stocks are rallying Monday morning, rebounding from losses last week as news from a Moderna trial stoked optimism about a potential coronavirus vaccine. And some of the data that's coming out from countries that have been reopening is somewhat encouraging.
Yeah, I mean, the market had already started to look reasonably positive this morning before the Moderna news. But since we've had the Moderna news, I mean, that would be a game changer. So the probability that it's true and that it actually turns out to be a good vaccine option is getting priced into the market this morning. So we're up pretty strongly. It's one of the best days we've had for a while. And I'd say that that's most of the reason for the rally now.
All right, let's take a look at our first couple of charts here today with Germany reopening and seeing just how that data is playing out.
Yeah, so Germany started to open way back in April. So we've got a pretty good track record in terms of what reopening has done to their new caseloads. And that's really the good news, is it doesn't look like it's created a second wave for them. And you can see now even bookings of restaurants, which is the chart we've got in today, is starting to pick up, which is great news. People in Germany are obviously getting a bit more comfortable about going back into public spaces and spending, because that's one of the big concerns is even if you open up the economy, will the customers come? So some pretty positive news. And even without the Moderna news, the fact that the European countries do seem to be getting back to school, getting back to work successfully without triggering a second wave of coronavirus is great news for everybody else that's hoping to do that the next week or two.
Let's take a look at the Nordics a bit here, because one of the studies is showing that it might be more of human demand than government demand going back into shops and feeling comfortable being around people.
Yeah, and this kind of highlights the point, doesn't it, that even if you say to everybody, okay, it's all clear now, go back to work, you might not have the recovery in GDP. So this is a study looking at the impact on GDP of Denmark and Sweden. Obviously, Sweden is one of the classic cases of a laissez-faire attitude to coronavirus, where people are, I guess, encouraged to do sensible things, but not required to wear masks, not required to stop going to work. And when you look at it, they had a slowdown in GDP, about 80% of what Denmark saw. So people did stop behaving like they used to. They did stop socializing and going to restaurants and spending. So what we're seeing here is just evidence that the population and society is worried about this, whether or not the government says it's safe to go to work and do things normally.
All right, now let's move along and take a look at the U.S. experience here, because clearly we're going to be concerned about consumer confidence as well.
Yeah, consumer confidence is kind of important because before coronavirus, it was the one thing that really seemed to be driving the economy. The consumer was really confident. They were spending money mostly on services, not on manufacturing goods. And that was just propelling the stock market higher and higher, despite the fact that we were seeing trade wars and a general slowdown in world trade and world manufacturing. So the consumer confidence data was an important indicator that it would continue. And so this chart shows just how quickly and how dramatically consumer confidence has fallen. Why is that a risk? Well, I guess what it points to is that even though it seems like people feel like they're on temporary unemployment and things will just recover instantaneously, this might show that the consumer is a little bit more nervous about how quickly things will recover and whether they want to be spending now or saving for a little bit more in the future.
All right, and to wrap up on a positive note here with our last chart, U.S. COVID-19 testing, it's coming back, it's increasing, and it's coming back more negative.
Yeah, both good trends. So still not heaps of testing. 300,000 tests a day is not enough to get the whole population tested in a few months. It's going to take years at that rate. But the good news is that the people that are going in for testing still, for the large part, probably think they've got coronavirus and they're coming out with negative tests. So that's really good news. It means that even people that feel sick are less likely to have coronavirus now than they were a few weeks ago. So hopefully it's less prevalent in society. And as we increase testing, it would be great to see if we can isolate just the people that are testing positive and let other people more confidently socialize and get back together and get back to their old ways of spending and working.
Yeah, certainly a good way to start off the week, Phil. Thanks so much for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.